This is the Net Group Investments podcast, where we explore a variety of views and insights that investors care about. Hello, I'm Demisha Greater from Net Group Investments Multi-Management. This installment of your market and economic wrap is titled Political Party Machines Kick into High Gear as the Race to the Polls Approaches. With just over a week to go to the national election, there is much to consider for both citizens and investors. Domestic policy and its implications thereof has come into sharp focus, especially as President Cyril Ramaphosa signed the National Health Insurance, or NHI bill, into law last week. The debate around the NHI bill and its implications has been well ventilated across various platforms, and while there may not be much to add to the points already known, it may still be worth reiterating that largely the goal of universal healthcare coverage is not in question. It is, however, the implementation of the NHI in its current form, given funding, infrastructure, capacity, and administrative constraints, that is being interrogated. In addition, the timing, being signed just 2 weeks before the election, and the public fanfare around the signing event is telling. Many political analysts have argued that the presidency is aware that the bill will be tied up in courts for years, and there is unlikely to be any economic fallout from signing it into law now. With that said, according to the Bureau of Economic Research, there are risks that this could hurt the relationship with the business community. Whether this move by the ANC will bring in more votes for the ruling party will only be clear once the votes are tallied, as various scenarios are not completely off the table. In a recent note, political and economic analyst J.P. Landman reaffirmed his position on that both an ANC, EFF, and an ANC-MK coalition is unlikely at a national level. Nonetheless, there are still questions on what could happen if indeed the EFF and MK parties were both shut out of a coalition government. Meanwhile, in the US, electioneering ahead of November's presidential election is also ramping up. President Joe Biden established a range of tariffs on Chinese-made electric vehicles, solar panels, steel, and other goods. Donald Trump maintains that the measures do not go far enough, and while campaigning has proposed the idea of a 60% tariff on all Chinese imports, China could retaliate by instituting its own tariffs on US imports. In any case, tensions between the US and China is intensifying as more trade protectionism measures are becoming likely. In terms of economic data, the main focus in the US was consumer inflation. Sticky inflation and higher for longer interest rates have been hurting Biden's re-election chances. Nonetheless, US inflation data came out better than expected. The data fueled hopes for the US Fed to cut rates earlier in September compared with November previously. US equities set new record highs on Wednesday last week, boosted by renewed optimism on a US Fed cut in September. In addition, strong earnings reports with 77% of counters beating expectations versus the historical average of 67% also lifted markets. The S&P 500 and NASDAQ gained by 1.6% and 1.7% respectively, while the Dow Jones broke through 40,000 points for the first time in history. In the UK, the FTSE fell, while the German DAX and the French CAC closed in the red, likely reflecting some profit-taking. Locally, the JSE All-Share Index fell in line with global sentiment, with the local bourse finishing the week in positive territory. Last week, the rand rose to its highest level since last year, July. This was on US dollar weakness. The rand strengthened all the way to 18 Rand 18 against the US dollar. Looking ahead, on the domestic data calendar, April consumer inflation data that will be released on Wednesday will be the most notable release. And on the international front, on Wednesday, attention will be on the UK inflation data and minutes from the last US Fed interest rate decision. We have come to the end of our note. Until next time, happy voting from the multi-management team. Need Group Collective Investments is an authorized collective investments scheme manager in terms of the Collective Investments Schemes Control Act. Need Group Investments does not provide advice on financial products and will only give you factual information. For further details on our funds and to view our terms and conditions, please visit nedgroupinvestments.co.za. Need Group Investments. See money differently.